and a very warm welcome to everybody. Along with me, I have SGA, our Investor Relations Advisors. I hope you have received our result update presentation by now. For those who have not, you can view them on the stock exchanges and our website. During this quarter, the plant was shut down for 15 days in order to carry out the process of streamlining utilities for the capacity expansion of CPC Green and also to commission the Violet plant. CPC Green capacity is expanded by 480 tons per annum, which will be available from Q4 FY18. As indicated last quarter, we will be able to pass on the increase in raw material cost to the customers. As you can see, our raw material cost as percentage of sales has been decreased to 58.5% for Q3 FY18. First 9 months of FY17, last year was an exceptional year due to Chinese environmental issues. The prices of the product was very high. So the decrease in revenue was largely on the back of correction of realizations compared to last year. However, since then, prices have now normalized as compared to last year. Our business continues to grow on volume basis, making it more sustainable. For 9 months of FY18, the total volume for 9 months FY18 stands at 6,268 metric tons, grew by 10% compared to same period last year. And for Q3 FY18, the volume is 1,843 tons, grew by 25% as against Q3 FY17. During 9 months FY18, vinyl sulfone contributed to 68% of the revenues and CPC Green contributed to 32% of our revenues. The other capex is progressing as per schedule and is expected to be completed in the next 12 months. To focus on implementing our growth strategies and expansion plan, the board has appointed me as CEO of the company. Henceforth, I have resigned from the post of CFO. Mr. Sunil Rane has been appointed to look after the role of CFO, and I would continue to be Joint Managing Director and CEO. The company has received SME Business Excellence Awards for the Best Global Business and Chemicals and Pharmaceuticals 2017 by Dun & Bradstreet. Now I would like to update you on the operational performance of the company for Q3 and 9 months FY18. Net revenue from operations for Q3 FY18 is 59 crores compared to 66 crores in Q2 FY18. Net revenue from operations for 9 months FY18 is rupees 188 crores. EBITDA for Q3 FY18 stood at 9 crores compared to 11 crores during Q2 FY18. EBITDA margin for the quarter stood at 15.1% versus 17% during Q2 FY18. EBITDA was lower, which was impacted due to increase in employees' expense. Employee cost was up as we released the salary increment of FY17-18 during this quarter. EBITDA for 9 months FY18 is 32 crores with margins of 17.1%. Profit after tax for the quarter is 8 crores compared to rupees 10 crores in Q2 FY18. Net profit margin for the quarter is 14.1% as against 15.6% in Q2 FY18. PAT for 9 months FY18 stood at 26 crores with margins of 13.7%. With this, I would like to open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1 on your telephone keypad. We take the first question from the line of Jatin Damania from Kotak Securities. Please go ahead.
Good afternoon, sir. So just wanted to check if you can help us with the revenue contribution of VS and CPC in the third quarter of financial year 18, along with the volume respectively.
Yeah. So for quarter 3, the vinyl cell phone revenue was, one second. You want in tonnage or?
So both tonnage as well as in the...
So the tonnage of vinyl cell phone was 1433 metric ton, which was a 34% increase over last quarter, and green was 409 metric tons, which was almost flat like last quarter. Right? And the sales was 49.5, sorry, the 9 months. Sales was 16 crores, 17 crores for vinyl cell phone, and 38 crores for the green. Sorry, yeah. 1 second. Yeah, no, this is the volume. One second, hold on. Let me see. Sales breakup. Sorry, there was the volume. Just hold on. I gave you the 9 months sales. Now I'll give you the 3 months. Yeah, go to production volume and see. Okay, I'll just come with the sales figures. I'm just pulling it up. Meanwhile, can you just continue with any other questions?
Yes. I just want to check when now since our project, all the utilities has been streamlined, when do we expect Violet 23 to come into place?
The Violet production commenced this quarter, and the trial production and everything is going on. So we expect the sales to be started from next quarter onwards, the sales for the Violet.
So it will be from the first quarter of FY19?
That's right, yes.
So, if we have seen in the last couple of quarters, we have seen that because of the lower realization, lower operating leverage, our margin has been coming down on a sequential basis. And last quarter, we have recorded a margin of 15%, though it also includes the increase in the expense. How do we see margin going ahead for FY19 and 20 once your expansion plans falls in place?
Yes. So the margins have been going down mainly, of course, one is the sales price came down significantly from last year. But apart from sales price, the rupee and the raw material costs are the 2 main reasons for the margins going down. So going forward, if you ask me a question, I would say the margins would continue to be between 15 and 20%. It depends on the favorability of the rupee and the raw material costs, which have been very volatile. Like last quarter, the rupee was the strongest. The crude oil also was always going high. So when it reverses, this will slightly improve, but we expect at the current levels to be between 15 and 20%.
Between 15 and 20%. And so do we expect the prices of the VS and CPC to be stable around current level, or we expect much more volatility going ahead?
The CPC green has been stable, and I see no change. There is no change. There might not be expected change. Of course, the little rupee appreciation was only negative. But for the CPC green, the prices have been very stable. For the vinyl cell phone, it is very difficult to predict. Even today, as we say, Chinese situation is not very comfortable. The costs are high. So there is a scope of prices going up. We hope the prices will go up. But at this moment, I can't make a forward-looking statement on the prices to come. So we can only take, for example, this prices to continue as a guideline.
So, if you can help me, what are the current VS prices in China and what are the current VS prices in domestic market?
In the domestic prices, currently the VS is priced at around 240 rupees, while in China it is priced significantly higher at around 300 rupees.
Okay. And sir, I'm coming to the last question. Now, since all the plants are coming to like CPC, the second phase of expansion, which will be completed in next 12 months, so where do we see the contribution from precipitated silica to come in place?
From Q1 FY20.
Okay, so that will be in the next financial year only.
Yes, that will be next financial year. In this year, we will get contributions of H acid from next quarter onwards. So we should get the contribution of H acid for the full year in this coming financial year, FY19.
So H acid also will be starting from FY19 only?
Yes, Q1 FY19.
So, sir, I mean, leaving beside the silica, where do we see the incremental revenue coming from, and how much that will be from H acid, CPC?
Yeah, so the incremental revenue will be coming mainly from three expansions. One is the H acid. From H acid, the incremental will be approximately 50 crores, the additional revenue. For green expansion we are doing in Dahej, additional revenues of around 100 crores will be expected. And also for the silica, additional revenues of around 100 crores will be expected.
So this 250 crores, the larger portion of that means 150 will see in FY19 and another 100 will flow in FY20, right?
No, only the H acid 50 crores will flow in FY19 and the remaining 200 crores will flow in FY20, full revenues.
Okay, sir. Okay, sir, thank you. That's all from my side. If I have any further question, I'll join back in the queue.
Yeah, just a clarification. The green expansion of 500 tons, what we have currently completed, is not included in this 250 crores. This is the new expansion capex is what I talked about.
Okay, so that's okay, so not an issue. Yeah, thank you.
Yeah, thank you.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. We take the next question from the line of Sandeepan Ghosh, an individual investor. Please go ahead.
Good morning. Good afternoon, sir. Congratulations, Mundal sir and Sunil sir, for the new chairs as CEO and CFO. Sir, I had two basic questions. Firstly, sir, I'm very much confused. So what is exactly Violet 23 and the difference between CPC Blue? Because in the capital expenditure plan, I don't see any Violet 23. Please, can you explain?
Yeah, the Violet 23 expansion we had done, it's a small product and we have just started on a small scale, so we did it out of internal accruals. So we had not put up the project as part of the new capex. We funded it out of internal accruals. It's a pigment, just like pigment green, it's pigment violet in which the same distributor network is going to be used. So we just are slowly getting into another variant of pigments like pigment green. And since it was a small capex, we did it out of our own internal accruals. It was not mentioned in the larger capex along with the H acid or the green expansion or the silica expansion.
Okay, sir. So other thing is, so about CPC Blue, so I don't see you mentioning anywhere it contributing to a revenue. Is this kind of a backward integration for CPC Blue?
CPC Blue is only meant for captive consumption. There's going to be no additional revenues from CPC Blue when we put in. We have not, currently we have undertaken the projects of green expansion in Dahej, the silica expansion in Dahej, and the H acid expansion here, besides completing the green expansion and violet expansion here. So after that we will be focusing on CPC Blue, but yes, it will not be contributing to revenues.
So what is the capital? Is this the raw material for CPC Green?
It's a raw material for CPC Green, yes.
No, so how will it advantage, give us advantage? Hold more control over the raw material pricing for CPC Green?
It is just like add a little contribution margin increase because of captive.
Okay. So what is the margin expectation in silica? 20 to 26% can be possible? Higher of 25%?
That is what we have planned, and we stand by that because of the grade what we intend to make.
Okay. Sir, from the previous concall, I heard your vinyl sulfur and CPC Green EBITDA margins are around 20%, right? Around that?
Yeah. It is expected to be. Today I've given a guideline of 15 to 20 because of the environment of the rupee and the raw materials. So when this becomes favorable, we see it at around 20. and currently the rupee and the raw materials last quarter have been unfavorable. So the margins have been around 15% EBITDA margins.
So raw material prices are basically affecting your vinyl sulfone, right? Not your CPC green, right?
No, the CPC has been stable. The raw materials, whatever little increase it comes, it gets absorbed. So there's not much impact of on finished goods as well as raw materials on CPC green. For vinyl sulfone, the price of raw materials are quite volatile, like caustic soda, aniline oil, etc.
Yeah.
So these sort of raw materials impact the margins.
Sir, so by increasing the revenue mix of CPC green and silica, sir, we will be stabilizing the raw material, stabilizing the EBITDA margin also, right?
Yes. So vinyl sulfone is a little, only the volatile product. These margins are stable, and you see silica, we expect it to be as stable as the pigment business. So the volatility of EBITDA margins will decrease after these two, green expansion and silica.
Okay, so point taken. Sir, about the debt, you have taken the QIP fundraising. Now, sir, what is the debt portion are you planning to take, and what is the accruals? And sir, what is the source of this debt? Are you going to take some foreign currency loans?
Sorry, can you repeat the last line what you said?
Sir, what is the debt are you going to take for this capex? Number one. Number two is, are you taking any foreign currency loans for this debt, or are you continuing with SBI as you previously did?
Yes. So, in the closing parts of the project, we do plan to undertake a debt of around 30 to 40 crores. We don't currently intend to take it right now because of the QIP proceeds and internal accruals. But in the closing part of the capex, we might take, and that time we will consider a foreign currency loan as well as rupee loan to see which is more favorable to us at that moment. Because even if we take a foreign currency loan of 30 crores odd, we can offset it against our exports. So it is a consideration, but right now we have not, fixed up whether we are going to take Indian currency loan or a foreign currency loan. And the debt portion currently is zero, but we expect it to be taken only in the last project completion part of the project.
Sure, sir. Two more small questions. Sir, your present...
This is the operator. Mr. Ghosh, may we request you to come back in the queue for a follow-up, please? Thank you. We take the next question from the line of Akhand Pratap Singh from Way to Wealth. Please go ahead.
Good afternoon, sir. Sir, my question is on the China part actually, because a lot of capacities were shut down or were operating at lower utilization level. So, and the government is planning to shift the few plants in the chemical SEZ, I read somewhere. So, how much time it will take, and how India will be impacted due to that? First question is that, and second part is that we are adding the capacity. Many Indian players are also adding the capacity. We are expecting a growth of around 11%, which we have mentioned in the presentation. But if I add up the all capacities of all companies which are setting the new capacities, actually the growth is much higher than the 11%. So going forward, what will be the outlook on the prices? Will it fall because the Indian capacities will also come and Chinese plant, which are supposed to shift in the chemical SEZ? So new capacity, the plants, Chinese plants were operating at the lower utilization. Then the utilization will also improve and new capacities will come. So wanted to know the outlook on the industry, like the prices, demand growth, like these things.
Okay. So when I answer this question, for pigment business, the Chinese outlook does not affect it at all. So then I will be answering this question only for the vinyl sulfone business, because pigment business is not affected by the Chinese prices or the Chinese capacities. It's an Indian-centric product. Regarding the vinyl sulfone business, the Chinese coming back or going into SEZ is not what information we have or what we expect. In fact, even today, as I just mentioned, Chinese prices are more than 20% higher than Indian prices, the cost as well as the finished product. So China, they are continuously facing not only environment problems but cost issues. Because of this, the market is shifting to India. Even the dyestuff market is shifting to India from China. So because of that, some Indian product people here are adding capacities, because China, even for the dyestuff exports, is losing market share. So that is being taken over by India. So that is why you see intermediates India expanding some of the capacities. So these capacities will be absorbed by the reduction in production of China. As far as we are concerned, our markets for vinyl sulfur are predominantly Korea and Taiwan, and their markets are relatively unaffected by the shifts of dyes from China to India.
Okay. Okay, sir. This was my question. Okay, thank you, sir.
Thank you. Participants would like to ask questions, please press star, then 1. We take the next question from the line of Ankit Gaur from Systematic Shares. Please go ahead.
Hey, good afternoon, sir. Ankit here.
Good afternoon, Ankit.
Sir, first question with regards to acetonolide prices, how they are moving as of now, and what's the trend you foresee there?
So what happened was, apart from the effect of crude oil, in the past 3-4 months, because of the winter situation in China, almost all of northern Chinese capacities of many products were down. Because they were using the coal first priority to generate heat for the people. So to control the ambient air, many plants were shut down. So this included some plants of caustic soda as well as aniline oil. So because of that, there was a shortage of these products for a few months, and the prices of aniline oil and acetic acid shot up by around 25 to 30% in the last quarter. And we expect now that the winter has eased out, these productions are becoming normal there. Aniline oil, acetic acid, caustic soda. So we expect from March onwards, these prices to stabilize and rationalize.
Okay. And as of now, what is the price of acetonolide?
The acetonolide price, average price is around 110 rupees.
110 rupees, right? And sir, we also seen increase in other cost, which is mainly led by increasing fuel and power cost. Any other reasons there, sir?
No, the fuel and power cost, one, as you know, the volume growth has been there. Secondly, the H acid construction is going on. Thirdly, the fuel cost, there was also an increase of cost of coal. Because of the same situation, of shortages. So because of this reason, the fuel cost also went up a little.
Okay. And sir, this quarter tax rate stood at 15%. And how should we look at it for a full year basis and next 2-year basis? We might get a lot of incentives for capex in our tax rates. So what is the fair assumption there, sir?
For what? Can you repeat?
Tax rate.
Yeah.
Tax rate. So what could be that, sir, for the full year and next 2 years? What could be the fair to assume? What number?
So the tax rates, it will be difficult to right now depending on the profitability. But currently we are not under MAT, so we are paying taxes even higher than MAT. But with the current capexes coming on, with the depreciation coming on, we should be better planned for the taxation percentage will come down.
Correct.
For next year onwards.
Correct. For the 9-month tax rate was around 24% for the first 9 months.
That's right. Yes.
Correct. So should be in that range for the full year and probably next 2 years as well. Is it fair to assume that way, or?
The full year tax percentage, we expect it to be just approximately under or around 30.
Okay.
And next year we expect tax rates to come down significantly because of the expansions that are coming in play.
Okay. And sir, my second last question is on overall CPC green environment. We didn't see much of volume growth there. Was it mainly because of a plant shutdown? And if it is yes, how much that would have cost us in 15 days plant shutdown in terms of revenues, loss of revenue?
So we lost 15 days production of the pigment business in the plant shutdown.
Okay.
So that is, 15 days is quite significant. So we lost, there was no growth of sales or production in this quarter because of this. Yes. So 15 days production we lost, and accordingly sale also. Otherwise, there would have been a sales growth, which we hope to see this quarter because now the new capacities also come in.
But sir, wasn't it planned shutdown? So we could have stored inventory, in a CPC green pigment side and did it planned wise, or how it is, sir?
So we are constantly having order book positions.
Okay.
And we could not really plan to produce that additional inventory to keep it for that time.
Okay. Okay. And sir, will it be possible to quantify a revenue loss because of this 15-day shutdown?
The revenue loss would be around 50-day production is around 80 metric tons. I would say the revenue loss of pigment green. So 80 metric tons into 400 and yeah.
Okay. And sir, one thing the previous participant asked about sales breakup of vinyl sulfone and CPC green for 3QFY18. If you can provide that will be great.
Yes. So the sales breakup was 35.5 crores for the vinyl sulfone and around 18 plus crores for the green.
Okay, 18 crores.
Yes.
Okay, sir. Thanks a lot.
Thank you.
Thank you. We take the next question from the line of Raj Shah, an individual investor. Please go ahead.
Good afternoon. I wanted to understand that the raw material prices were at 42% last year, I think around the quarter 3, and it's gone up to around 60%, and now it's come down to 58.5. Are we thinking of it going back to 42%, or what range would it be at?
Yes. So number one, as normally in summers, the problem of Chinese raw materials shooting up goes down. So we expect the prices to come down because of that, and also crude oil from 70s it has come to 60s and low, high 50s also. So because of that, raw material should come down. So we don't expect it to come that low, but yes, we expect it to come lower and lower in the coming quarters.
Okay, but we will not be able to pass on the cost of the raw material cost to our customers.
Normally, it takes 1 to 3 months effect to pass on either ways for increase or decrease.
Okay, so let's say we say that 80% of the vinyl sulfone capacity is in India. So I'm guessing there's some advantage that we have, Indian players have. What advantage is that?
50% of the vinyl sulfone capacity is in India, around others in China. But the costs of raw materials go up in India and China as well, because what happens is even if the raw materials are made in India, once the problem happens in China, the Indian companies also take advantage by increasing the raw material prices. So the raw material cost evens out between India and China.
Okay, so when our raw material costs were at 42% of revenue,
yes.
So our crude was low and the raw material prices were also lower. And
yes, and also sales realization was higher that time.
Sales realization also higher, right? Okay, because of that. And you have an other income in the last quarter and this quarter. So what is the other income for?
That's from our treasury management. We do treasury management successfully since many years, and also some of the QIP funds temporarily, caught in that additional revenue.
Okay, so if we remove that, then our PAT has gone down significantly for the last 2 quarters.
That's right. Yeah.
Okay. Thank you very much.
Thank you. Participants would like to ask questions. Please press star, then 1. We take the next question from the line of Sandeepan Ghosh, an individual investor. Please go ahead.
Hi again, sir. So the numbers you tell, like each acid contributing to 50 crores, CPC Green 100 crores more, and CPC Silica 100 crores more. So these are revenues at 100% capacity utilized?
The revenues at 100% capacity utilization is, you're asking only for the expansions or total you're asking?
No, sir. Only the expansion figures that you are giving. What is the capacity at which you can achieve this?
1 second. The numbers what I told you this we achieve it around 80-85% capacity utilization.
Okay. This 250 crores of additional revenue that is going to be clocked within the next 2 years.
Yes, that's right.
So why 80%? So I see back in 2013 you got 94% capacity clocked. After that it was average being 74 to 80%. So is that the reason? What is the reason exactly? The demand not picking up to let you achieve 100%?
No, it's not that. Like to go up to, we have been in this product for so long to achieve 90% utilizations. So, as time goes, in 2 years, 80% is a fair target. And, then in time goes, from 80 to move on to 90 or something is a possibility. But, right now for me to say immediately 90% would be a little, too aggressive. But eventually, yes, our track record says we can achieve 90%.
So you mentioned the 15% export growth in your presentation for the dyes and the pigment process. So that means if 50% CAGR is the growth, then within 3 to 4 years you have to maintain more than 90% to be in the competition, or since you obviously take a large share of the export.
Yeah, so eventually after 2 years, the utilization will go up and the revenue growth will go up. So, but I'm putting it at 80% because it's what I know I'm going to achieve in 2 years. So then anything more than that will be good. But our track record says we achieve 90% utilization, and the market should be there also.
Sure. So last one is about the production loss. So can you quantify the exact amount of loss in the metric tons time? Right.
Yeah, I'll just 1 second.
Yeah, please.
So around 3.5 crores of revenue loss for the pigment green business can be considered because of the production loss of 15 days of green.
Okay. So it's a side question. So what is the price of aniline going on right now, and what is it was in Q3? Please, can you tell me?
So I'll tell you, we buy acetylite. So in acetylite, the average price of in Q3 was 86 rupees, and right now in last year, FY17, and this year it is 110 rupees.
Okay, these are Q3 numbers, right?
Q3 numbers, FY17 versus FY18.
Okay, fine. Sir, okay. All the best to you.
Thank you so
achieve more capacity and much top line and bottom line for it.
Thank you so much for your wishes.
Congratulations for the new chair. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to Mr. Jai Krishna for closing comments.
I take this opportunity to thank everybody for joining the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with me or Strategic Growth Advisors, our IR advisors. Thank you once again. Have a good day. Bye-bye.